Okay guys, so I want to cover Micron Technologies in this video. I've been doing a few of these semiconductor companies over the last little while, and I'll try to link these above or down below in the description. I've talked about AMD, I've talked about NVIDIA. Micron is in the same sort of space, and I think all these companies are really interesting to look at now from an investment opportunity standpoint, because this whole chip shortage thing has shaken up what was an otherwise kind of predictable market, and these companies are getting a lot of attention right now. There's a lot of volatility associated with them, and anytime that happens, there's potentially good investments to be made. So I want to take a look at Micron specifically, do the bull and bear case thing, let you guys know what I think are the good aspects of this company. I want to present a balanced case on the bearish side as well, let you know what some of the risks are, and stick around to the end. I'll give you my synopsis and my overall opinion on whether this one is a good investment or not. Let's go. Okay, so the good thing about Micron is that they're not all that difficult to understand. They're in a relatively easy sort of business model. They make memory. They make two different kinds of memory, and you've probably heard about both. One is DRAM, and the other is NAND memory. And those are just acronyms for the technology behind those different types of memory products. Okay, so the first of those two is NAND memory, and you're probably more familiar with this in terms of flash memory, right? And in terms of a flash card or something like that in your camera or whatever it is. And the characteristics of NAND memory is that it can retain storage after it loses power. The other type of memory, DRAM, is non-persistent storage, and so after the device that it's in gets turned off and it loses power, that data is gone. And so depending on what the application is, you need these different types of memory for different things. So we see them in computers, we see them in cell phones, we see them in cameras, we see them in all kinds of little electronics. And beyond the consumer marketplace, they also make an appearance in tons and tons of little tiny industrial sorts of devices that are appearing all over the place. So there's a very broad market for both these types of products, not just the storage applications or computer-based applications that we're used to on the consumer side. Now, between those two markets, DRAM is by far the larger market. I think it's like 70+% of Micron's business, and it's really the one that most analysts take a look at in terms of trying to understand the stock price, and do that broad market forecast kind of thing. So if you're looking at either segment of the business, DRAM is definitely the one to focus on as the most important market driver for Micron.
What's the upside potential?
Okay, point number one in the bull case is that both the markets these guys are in, the two primary lines of business, DRAM and NAND memory, demand is up, pricing is up. You know, these guys came in on the last quarter with $7.42 billion of revenue versus $6.24 billion expected, so a really nice surprise on top side revenue. Same thing on earnings. They had about a 10% EPS surprise for the quarter that was just announced, and that's really driven on the back of strong market demand and strong market pricing for DRAM and NAND memory, and this is a direct consequence of increased demand for computing devices during the pandemic, and increased work from home and all this kind of thing. There's a lot of strong market forces that are driving that forward, and will probably continue to drive it forward, at least in the near term. So very good results in the short term that I think are only likely to continue here. Point number two here is gross margins. Companies like Micron actually live and die based on the efficiency with which they can turn one thing into another, memory in this case. Their margins are really good, 31.9% versus 20% quarter over quarter in the last 12 months. That's a really, really nice improvement. It's super important for a company like this because they're very constrained on the supply side. They're very constrained on the demand side in terms of the agreements they have with major manufacturers and that kind of thing. So they can really make their money by becoming leaner and meaner on the cost side, and then eking out some additional pricing on the demand side. Those two factors together determine their gross margin, and any tweak that they can make to a business process or a contract or a deal or a license agreement or whatever it is will improve that margin. So the folks in management at Micron are intently focused on these continual improvements to the business, and investors look for this in terms of their gross margin number. It's really one of the few ways that Micron can actually become more profitable over time, and in a company like this you have to keep a super close eye on the these gross margin numbers, and at the moment they're really good. You know, you take a look at the quarter results, management is bullish. You know, there's strong guidance coming out right now, and again, the thing to look at here is guidance on gross margin numbers. They're actually forecasting further improvements in gross margin. There's no reason to not believe that they'll meet these targets. You know, they actually have a pretty good incentive here to make realistic projections, and I think they are. So I'm really looking forward to the next quarter. I think that it's likely to be as good as the last one, and that's all good news for the stock price. Okay, the next point I'll make here is sort of a broader factor. You know, Micron and companies like it have a history of being very cyclical, and they go through these boom and bust cycles. And really a lot of that has, in the past, been driven by a dependence on the consumer market. So demand for consumer electronics goes in that sort of boom bust cycle, and anybody that supplies that market is sort of at the mercy of it. And, you know, what happens is all the competitors rush in when they see a good market opportunity. They scale up production. They go too far. The market gets oversaturated. It bottoms out. The opposite happens, and you get this boom cycle. And so, you know, Micron is now moving away from that. I think over the years, it's been moving to more of a secular growth story. And there's a lot of drivers behind that, right? So we're getting away from this core reliance on the consumer market. We're moving into cloud. We're moving into data center applications. We're moving into Internet of Things. You know, there's a lot more devices in the future that are going to require memory and are going to drive sales and growth for Micron. And really the story here, and management is trying to move into this story, is to get away from that cyclical market dependence and into this longer term sustained growth sort of market. Now, if you look at a company that's in a cyclical market versus one that's in a secular growth market, the price multiple or the valuation that gets applied to the stock is radically different, right? So I think that if Micron can actually grow into that secular growth story that they're attempting to pivot to, then they're actually going to warrant a much higher multiple or valuation of the stock. So some of the buys today at what is still a relatively low multiple, I think could recognize an improvement in that price multiple over the next 3 years, 5 years, whatever that number is. I'm pretty confident that Micron is absolutely moving there, not so much based on what they're doing, but just based on what the broad market is doing, right? I think the cyclicality of this particular market is going to fade, and I only see good news ahead in terms of strong, sustained growth. I think it's a great time to buy a company like Micron. And the last point I'll make here is the current valuation. You know, I have a feeling that Micron is pretty fairly valued at this point. You know, there's an equally valid argument on the bull and the bear side, but really I think the valuation we're looking at here is fair. It compares well to the industry average, and it compares well to some of the competition. So I have no problem with the current valuation. I don't think the stock price is necessarily inflated. I don't think it's necessarily undervalued either. It's not a screaming buy, but I think it's a point in favor of the bull case here that you are at least not overpaying for what is otherwise a good quality company. I actually like the valuation on this one.
Let's talk about risk.
Okay, so the bear case here rests on a few things. Point number one I'll make here is that, you know, I think you could make the argument that the demand for DRAM is peaking and that the market is potentially seen a top, and it's really got only one direction to go from here, which is potentially down in the moderate to longer term, right? So I think the current quarter is going to be good. I think most people would agree with that, but I think the bears are out there saying, hey, you know, DRAM demand is still cyclical, and, you know, out in the next 6 months or so, we're probably only going to go down. We're going to see that slackening of demand as reopening happens, as the chip shortage thing sort of works itself out in the supply lines, right? So you could make a case that DRAM demand is not getting any better from here. It's only going to flatten, and I think as the second that happens, it's going to dramatically impact gross margins for Micron. And I think a lot of investors are now betting on the fact that we're now going to see a removal of that tailwind in terms of increased DRAM market demand, and as a result, the price is going to decline. And I think we've already seen that, right? We've seen that little bit of a price decline in Micron. I think it's driven by this moderate to longer term bearish outlook on the market demand for DRAM. So you have to be very careful about the time frame you're looking at here, right? I think most people would agree that the short term is pretty bullish, but the medium to longer term might not be quite as good. Second point I'll make here is really in the same vein, and it has to do with the potential for a decline in gross margins. You know, if you look at the history of Micron, and its stock price tends to be tightly correlated with gross margins. We know that it's the nature of the business, and really the gross margins are at a high point, right? It can't get much better than it is right now. What happens if it can't get any better? Well, it gets worse, right? That's the nature of a cycle, and I think a lot of market participants right now, a lot of investors in Micron are trying to anticipate a downturn in gross margins. You know, whether that comes from a decline in market demand or something else, just the fact that they can't make it any better on the manufacturing side, right? It could be that the cycle is going to head down, and the market is so forward-looking, right? Especially in what is ordinarily a fairly predictable market cycle, you know, in the business that Micron is in, that a lot of these big institutional investors are forecasting a potential drop, I think, in gross margins, and again, they're trying to get out ahead of that, right? I think they're putting that selling pressure on the stock now, trying to hedge their bets against a gross margin decline 6 months out, whatever it is. And so you have a lot of forward projected activity that I think is pressuring the stock price today. The next point I'll make here is the Capex situation. This is something that came up on the last 2 earnings calls, I believe. You know, the last little while, Capex estimate went up by about 300 million. And usually the problem with this is that it's a sign of a top in terms of the cycle, right? So what happens if you respond to increased demand, you spend Capex, you ramp up production, right? So people try to look for this ramp up in Capex spending as a sign that we're at near the top of the cycle, right? And they try to get out ahead of that. They try to sell the stock before there's a decline in the market. There's a decline in Capex and that kind of thing, right? This is a complicated one because you have to look a little bit deeper than just the increase in Capex. There's a lot of technological changes in this particular market in terms of how these chips are manufactured and all that kind of thing. So, you know, management has tried to reassure people that, hey, this increase in Capex is a strategic move. It has to do with the particular lithography that they're using to cut these chips, and really it's just a routine investment in the technology. They're arguing that it's not necessarily a sign that they're ramping up production because management is trying to say, hey, this was not an increase in production. This Capex did not go to increase memory production. It went to preparation for a technological change. So don't worry about it. It doesn't necessarily indicate a top, right? So depending on what you believe, I think a lot of people are still anticipating that it could mean that we're at the top of this cycle and people are nervous at this level, right? They're trying to anticipate that downturn, and this is yet another sign that we could be at that peak. So the last point I'll make here is the shakeup in the supply chain. You know, I mentioned in the intro it's affecting a lot of companies. It's having a particularly interesting effect on Micron. You know, their customers are reacting to this disruption in the supply chain by becoming more defensive, right? And so they're actually building up some buffers and they're actually stocking different products like memory products in their own warehouses as sort of a buffer to guard against these supply chain disruptions. So a good idea on their part, I think, but it really impacts Micron's business because it makes it less predictable. And what happens is they don't necessarily know what these customers are going to want in the next quarter or in the next few quarters up ahead. And so it makes Micron's revenue a little bit more difficult to predict and to actually figure out what they're actually going to make in the next little while. Any amount of uncertainty in the business model makes investors wary, and it makes investing in Micron just a little bit more risky because you have less ability to forecast what's going to happen. Anytime there's more risk in a stock, the price goes down a little bit, and I think this has contributed to this downwards pressure on Micron, is investors are a little bit more worried about their ability to accurately forecast and predict what's going to happen. And so I think the market is going to keep an eye on this go forward, and maybe this will work itself out, right? Maybe one of the fallouts from the whole supply chain problem will be that things will settle down. Companies will go back to a just-in-time supply model, which is what it always used to be in the past. Predictability will return in terms of Micron's business model, and maybe this risk will be removed. Unfortunately, I don't think that's going to happen in the next year or so. I think this increased risk in Micron's business model is probably going to remain. It just remains to be seen whether it's going to get any worse or better from here. Okay, so let's sum this one up. You know, the bull case, it's based on strong numbers. It's based on continued market growth in at least the short term. Next couple of quarters, I think, are going to be really good. And plus long-term growth prospects, I think, are really, really good, right? I think that the secular growth story that this particular industry is heading towards is nothing but good for Micron. The bear case, though, is based on these short-term fears that we're at a cyclical top, right? Now, whether you believe that or not, I don't know. It could be true. It could not be true. You got to sort of play this game of trying to predict the short-term swings in the market and what it's going to do to Micron's price. So, you know, my feeling on this is that if you're a longer term investor, you can sort of pull back and I think ignore the bear case in this situation. In fact, I think you could look at it and say, hey, the recent selling pressure on Micron has only created a good buying opportunity for someone that likes the company, has faith in the business model, and wants to capture a share of that longer term growth. I think potentially this short term dip in terms of short-term bearish sentiment is only good news for a longer-term investor. You know, if you're a shorter-term investor, if you're trying to swing trade this thing, if you're looking at shorter-term profits, maybe you're an option speculator or something like that, then really I think you have to pay more closer attention to this bear case. I do think that the cyclical nature of the business is still with us. I don't think they've transitioned to secular growth just yet. So if you're in that sort of model, I think you have to be super careful. But again, I'm a long-term investor, right? So I look at this one and I go, wow, this is nothing but good news. I like this downward pressure on the price. I'm going to try to buy up some of this one and hold it for a good long time. This is a good company to hold for that long term. Anyway, guys, that's my story. I hope it makes sense. I hope you guys like this one. Please throw the video a thumbs up. It absolutely helps me grow the channel. Don't forget to subscribe and ring the bell, and I'll see you on the next one.